All right, thank you for joining us again. Let's get started. Nigeria's external reserve falls by $2.8 billion in the first half of 2023 as Nigeria continues to struggle with weak crude oil exports and a lack of foreign investor participation in the capital market. Now, the external reserves opened the year at about $37 billion, but have now dropped to about $34.1 billion US dollars as of June 2023. Nigeria's external reserve is an important barometer for valuing the country's currency. It's also to use estimate how many months of import it can finance. Now, the external reserve has also dropped by almost $1 billion since the Tinubu administration came into power on May 29th, 2023. And has gone from about 35 billion as of May 30th to 34.1 billion. This is despite the unification of the naira and the introduction of a managed exchange rate float. All right, for more insight, let's get talking now. Viola Kwaga, a senior analyst at Budget Foundation, he joins us now to look at the implication and consequences of this. Thank you for joining us. We appreciate your time.
Thank you so much for having me, Mr. Frank.
Okay, so let me get your opinion about the performance of the Nigeria's external reserve, which dropped by 2.8 billion in the first half of 2023. That's reaching around 34.1 billion as of June due to weaker crude oil output, according to this report. So what do you make of these?
Yeah, so the happenings in Nigeria's external reserve sector is one that, I mean, a lot of economic analysts have also said the same, is one that did not come as a surprise. A lot of the challenge, and this is something that is like a running joke that you and I have, when I always say that the problem with policy analysis is that you're always looking backwards. So this is an appraisal, this is an evaluation of decisions that had happened in the past, that had their impact also in the past, and we are looking back at what happened and what the outcome of those decisions were. So the reduction in external reserves was expected as a result of the regular uncertainty that tends to pervade the Nigerian political space. Unfortunately, to a very large extent, the Nigerian economy is dependent quite heavily on signals from the government. I mean, you could make the same argument for the United States, where you have the U.S. Federal Reserve Chairman always giving, regular speeches and updates that analysts have seen have a direct impact on the fluctuations and volatility in the market. I guess the same obtains for Nigeria, but more or less is about the whole of government, as opposed to, the Federal Reserve Chairman's equivalent in Nigeria, the CBN governor. So one thing that perhaps the government or successive governments in Nigeria need to look at is to ensure that there's a delinking of the perceptions of the private sector and the international private sector to the actions of government. There should be a seamless transition between one administration and the other, because government is a continuum. And the more and more Nigerians see, this cycle of speculation and reservation, or the bullish and bearishness of our economic subsectors, I think the worse it will be for us in the long term. I will round up by saying that the drop in oil production was a huge created a huge level of impact on our external reserves, because, as you know, that is our main source of foreign exchange. I suspect that quarter 2, 2023 might also see similar, if not very low numbers or low performance. I do not see the external reserves improving beyond maybe $1.5 to $2 billion in second quarter of 2023. But I will say that for Nigeria to improve and take numbers back to what it used to be, take our external reserves back to pre-2015 numbers, we will have to do a lot more in terms of revamping the economy.
Okay. So how do you think President Tinubu is responding to the depletion in the foreign reserve? I mean, we're seeing unification of the forex, I mean, the exchange rate. We thought that that should impact the economy in a way, perhaps some other people may differ. But if you put that side by side, that's the policy of forex unification, and of course the depletion in the foreign reserve. So what can you make of these two developments? Because we thought that after that exchange unification, well, of course the parallel market should have been wiped out, and then we can have more activities in terms of export and import, and then we can have more that will have impact in the foreign reserve. So talk to us about this. What's your position in this?
Yeah, I mean, you've raised several very, very interesting issues. Now, we must remember that fiscal policy and monetary policy are the twin policies of any government. And going by the arrangements we have in our peculiar federal structure, the Central Bank of Nigeria has a level of autonomy from the executive, as it were. The central bank is quasi-autonomous. The central bank has several tools within its arsenal to ensure price stability, to ensure full employment, and to ensure that external reserves are at optimal level. It does this through, the regulation of the cash reserve ratio, interest rates, monetary policy rates, as you will, and inflation targeting, which sets the various corridors upon which deposit money banks can operate. And, it's open market operations, the sale of treasury bills, and what have you. So that is, on one hand, the monetary policy tools. So the attempted unification of the exchange rates will not bring about the positive changes just yet. However, I will tell Nigerians that the savings from the parallel market and the official rate, could amount to some trillions of naira if the handling of this unification is done to the extent that it allows for stability, and it creates a situation where the market can predict just how much the naira will be. On the other hand, you have fiscal policy, which looks at how taxation and expenditure, can create or encourage or influence demand, and of course, go about the regular functions of the Nigerian government, which is infrastructure and what have you. So you need to be able to merge these two tools, the fiscal and the monetary. The fiscal, in the sense that what does your taxation regime look like? What are the customs duties? What are the excise duties, both on imported goods and on goods for exports? Where the government is able to raise, excise duties and custom duties on imported goods, it will mean that imported goods will be more expensive because you pay a premium on that. That is meant to encourage exports. Encouraging exports is a means to improve Nigeria's foreign exchange earnings. Right. In my previous comments, I made the statement that a lot of our revenue, our foreign exchange, comes from oil, and where the government is able to create a liberalized sector to allow for that share of our foreign exchange to move towards other non-oil exports, you will see, a rise in Nigeria's foreign reserves. And I think, for one, this government has shown good signals to the market and to the economy by the suspension of certain aspects of the Finance Act. The previous administration wanted to raise certain aspects of excise and taxation. And, this administration said, hey, why don't we hold on and implement the policy requirements of the national tax policy, which is to give a 90-day window before these policies are implemented to allow the market to really gather itself together and allow the economy to respond adequately. So, in summary, I will say that there will be some initial losses because the rates are becoming more and more unified. And as it were, you are moving from 400 naira to around 700 naira. By the way, the federal government still operates different windows. There's still a different set of price points for customs. There's a different set of price points for oil revenue from oil.